What factors are most influencing gold and silver? Is it the recent developments in Greece or the lack of strong gold buying coming out of China? Or is something else at play? Joining me today is Erik Norland of CME Group. Erik, thanks so much for being with us.
Thank you for having me.
So this week, Erik, we saw a major drop in Chinese equities, but we didn't see Chinese buyers flock to gold. Instead, they saw it as an opportunity to buy more stocks. Why did gold and silver take such a fall?
Well, I think that gold and silver tend to rally when the main concern is inflation. They're really mainly a hedge against a declining value of paper currency. But that's not really what we're looking at in China. What we're instead seeing is that China's in a very significant economic slowdown. They have very high levels of private sector debt, and they also have a very overvalued currency. The renminbi is just too strong and it's hurting their exports. And so that's actually creating the opposite of inflation.
Right.
It's actually putting downward pressure on prices. So that's one reason why gold didn't rebound on the China news. But another issue, though, is that gold is a very volatile asset. It has 15, 20%, 25% annualized standard deviation. And so if you're a Chinese investor and you're not concerned mainly about inflation, but rather about deflation or maybe the renminbi weakening, it would make more sense to put your money into US dollars or into government bonds.
Now, Erik, you had an interesting study called the push-pull dynamics of gold and silver, where you mentioned that investors seem to be so focused on the U.S. rate hikes, but maybe there's something else at play that they should be paying attention to.
Right. We do think that the U.S. rate hikes are somewhat important and that gold and silver have some negative sensitivity to increases in U.S. rates. But it's very easy to focus too much on the demand side of the equation and to ignore the supply side. Okay. And mining supply of gold and silver has been growing very, very strongly since 2009. And as that mining supply increases, it tends to put downward pressure on the prices of gold and silver.
Now that's interesting because the World Gold Council came out with a report that's suggesting mine supply to decrease in the second half of this year.
That might happen. They could well be that they're right, but I'm a little bit skeptical for a few reasons. First, on a historical basis, when gold and silver peaked back in 1980,
right,
their prices suffered a very enormous correction in 1981, 1982, and they stayed low until about the year 2000. But for most of that time, from 1980 until 1998, gold and silver mining supplies continued to increase in spite of lower prices. And there's some indication that that could happen again today.
Erik, let's look at something else on our radar, the gold-silver ratio. It's near its peak. It's closely correlated with global GDP. So do you think this could signal a stagnant global growth right now?
Well, growth is certainly stagnating in certain regions of the world. I think what we're seeing isn't so much that the world economy itself is not doing well, but rather that we're seeing a rebalancing of world growth. So the leaders in growth over the last 15 years were the emerging markets. But now Latin America is largely in recession. The Middle East and Russia, the big oil producers, are also suffering because of the lower price of oil. And then China, which was a major growth driver for the world, is seeing a very significant slowdown. And also India, which is a major consumer of gold, is seeing a very unhealthy mix of growth, where most of their growth is coming from financial services, but very stagnant activity in construction, manufacturing, and other sectors of the so-called real economy. And so we think that China and India in particular, because they're such big consumers of gold and silver, probably could reduce their consumption. And silver itself differs from gold in the sense that its primary usage is in electronics and manufacturing. And so to the extent that the major manufacturing centers like China, India, and Brazil slow down, it could put downward pressure on silver with respect to gold.
All right, Erik, with the time we have left, your forecast for gold and silver for the end of year?
I don't really have a specific forecast for the end of the year, but I do think that there's a risk that over the next few years, we could see gold prices take a very significant drop, maybe below $1,000 an ounce, possibly as far down to $700, $800 an ounce, before we start seeing that mining supply coming off the market. Additionally, it wouldn't surprise me if over the next few years, if we saw silver go down maybe as far as $10 per ounce, which I know sounds like a big drop from its current level at $15.60, but you have to remember that silver is extremely volatile, and just a few years ago it was at $45 an ounce. So if you can drop $30 an ounce, what's another $5?
Erik, thanks so much for joining us.
Thank you.
And thank you for watching the Gold Report. We'll see you next week.